Morning, everyone around the world. It's morning here in Lagos, Nigeria, and the second week of June. So now let's find out some of the biggest expectations of the week's global economic calendar. And starting first with the German factory orders, which fell more than expected in April, adding to concerns that Europe's largest economy could contract in the second quarter due to the Iran war and surge in energy costs. Now, according to Germany's Statistics Office, the latest factory orders month-on-month report for April dropped by 3.8%, missing market expectation of 2% decline. Now, this follows a prior jump in March, which was revised to about plus 4.5%, and that was largely driven by front-loaded inventory build. Now, the downturn highlights escalating economic pressures for Europe's largest economy. Now, for Tuesday, we're expecting that China's trade data report for last month will be released by the General Administrations of Customs in China. Now, economists project that the export growth will strengthen to roughly 15% year-on-year in dollar terms, and that will be driven by front-loaded overseas orders to preempt supply chain disruptions, alongside sustained demand for AI and semiconductor components. Now, let's move on to Wednesday. For Wednesday, the U.S. May inflation data report is expected, with headline CPI forecast to creep up to 3.9% year-on-year, up from 3.8%. Also on Wednesday, China's May inflation report will be released, and that's a forecast at plus 1.4% year-on-year, and that's crucial for assessing domestic demand. Also expected on Wednesday is the Bank of Canada, which will be having its monetary policy rate and is expected to hold its interest rate steady at 2.25%. Now, it has maintained that benchmark overnight rate steady at that level since October last year, and is expected to continue to hold this through the much of this year, balancing competing risks like inflation and global economic uncertainty. Now, so that's for Wednesday. Now, on Thursday, June the 11th, the European Central Bank, that's the ECB, is expected to raise its key interest rates at its upcoming Governing Council meeting, with market pricing in a near 99% probability of a 25 basis point hike. Now, if enacted, this will increase the key deposit facility rates to 2.25% and will be the ECB's first rate hike since 2023. Also expected on Thursday is the U.S. Producer Price Index, that's the PPI report, and the weekly initial jobless claims, which are both scheduled to be released by the U.S. Bureau of Labor Statistics. So market surveys expect an initial claims to hover around 225,000, and the PPI final demand to register around 0.75%. So in reactions, the bond yields are expected to climb further and put additional pressure on tech growth and growth stocks if inflation numbers come in hot. Now, finally, for Friday, the United Kingdom's, that's UK's April GDP data is expected to be released, with a 3-month average forecast to rise 0.8%, up from 0.6%. Now, analysts are looking to see if April's monthly figure can keep up with the 0.3% month-on-month expansion recorded in March. Investors will also focus on much talked about Elon Musk's SpaceX IPO debut on Friday. Now, that public offer is expected to be one of the largest in Wall Street history and could be the market's biggest test yet for the AI valuation narratives. Now, let's talk about the global news, what's happening right at the moment as we speak. Now, the International Monetary Fund's Managing Director, Kristalina Georgieva, says the world needs to build foundations that can withstand shocks that have become more frequent. Now, the IMF chief issued the sobering warning to the global financial community, saying that the world must abandon any expectation of a return to long-term stability and instead build economies capable of handling relentless recurring crises. Georgieva, who has been at the helm of affairs of the Washington-based lender since 2019, has been through the COVID pandemic, the war in Ukraine, the tariffs turmoil, and now the conflict in the Middle East. Meanwhile, the IMF will update its outlook for the global economy next month after downgrading its growth projection for the year in April amid the war in the Middle East, which marks its 100 days since it began on February the 28th. And that conflict continues to drive substantial volatility across all asset classes in every region of the world. Now let's move over to Indonesia, where the country has released its latest data today, confirming that the country's foreign exchange reserves fell by another $1.3 billion last month, landing at $144.9 billion. Now, this marks the 5th consecutive monthly decline, solidifying the longest continuous drain on the country's financial war chest since 2018. And that's when rising U.S. interest rates triggered a similar emerging market capital flight. Now, the drop highlights the extreme cost of defending a domestic currency in today's macroeconomic environment. bringing in a few critical pressures on the forefront. Now, still within the Asia region, Asia's key thermal coal benchmark has skyrocketed to a 2-year high today, triggered by new export restrictions from Indonesia, and that's the world's largest exporter of power plant coal. Now, the spike is being driven by a massive sudden regulatory overhaul from Jakarta. Now, this comes as the country's president, Prabowo Subianto's administration on Monday last week mandated that all exports of coal, crude oil, crude palm oil and ferrous alloys must be funneled and reported through a newly established centralized state-owned entity. Now, still within Asia, South Korea's President Lee Jae-myung has chosen the country's Minister for Small and Mid-sized Businesses Startups, Han Seong-suk, to be the country's Prime Minister. And this comes as President Lee marks his first year with a vow to find new growth engines for the country. Han, who has previously served as chief executive of South Korea's internet giant Naver, is expected to lead the country's AI transformation. Now, if approved by Parliament, Han will become South Korea's first female minister in 20 years, elevating a former technology executive to one of the nation's highest political posts. Now let's talk about aviation. Now, the aviation industry's landmark pledge to be net zero by 2050 will probably not, is not now to be achieved. This is according to the Director General of a global airlines body, IATA, Willie Walsh. Now, in a speech to delegates at the annual IATA summit in Rio de Janeiro, Walsh said that CORSA, that is Carbon Offsetting and Reduction Scheme for International Aviation, which is a global market-based measure established by the International Civil Aviation Organization, ICAO, was being undermined by government inaction, while annual production of sustainable aviation fuel, SAF, would only reach 2.4 million tons, or 0.8% of aviation fuel needs this year. Now, the goal is a 65% reduction, or that's about some 650 million tons by 2050. Now, the collective goal to eliminate net carbon emissions by 65%, like I said, is about, was declared by global airlines only 5 years ago in 2021, with similar pledges made by national aviation industry leaders and governments, including in the US, in the UK, in 2020. That's global news for Monday. I'll see you tomorrow.